Thanks so much for joining us here at Investing City. We're going to be going through Investing 101 questions from my fiance and her friends. So if you don't know anything about investing or you're in the early stages of your investor journey, please join us and we'll try to teach you as much as we can.
We kind of talked about a stock versus a share, and if they're the same thing, where there's different amounts of shares in the company, and a stock is you buy a stock, which is essentially the same thing as a share, right?
Yeah, you buy shares in a stock.
You buy shares in a stock. And are there gazillion stocks in one company, or is one company the stock?
One company is the stock.
And you buy shares in that.
Right.
Got it. Okay. So it's like a giant Lego building, and taking a Lego is a share.
Yeah, exactly.
And the Lego building is the stock. Got it. When I buy a stock, or buy a share in a stock,
Nice.
high-fiving myself. When I buy a share in a stock, do I need to constantly keep my eye on it, like every day checking it, or is it better to let it sit there and not do anything?
Yeah, that's a good question. So, right, it depends on the fundamentals of the business. And so companies report their quarterly earnings every 3 months. And so depending on those earnings and depending on the viability of the business, kind of the long-term trajectory, then you make your decisions based on those versus the price of the stock. So only in certain cases where, let's say the stock makes a crazy irrational move and the stock goes up 100% in a day and nothing happened, which would probably never happen. But now the valuation of that stock is now twice as expensive. Maybe it makes sense to sell a little bit. So I always say that it's okay to check your stocks, but you can't be emotionally influenced by the variations in those prices, because sometimes, like I said, the dislocation really happens between the fundamental value of the company and the stock price. And so it's okay to check them, but a lot of people don't check them because they're so easily influenced. And you see, stock goes down 10%. Should I sell? I don't know what's happening. So if you have no context or no bearing for why you're making the decisions you're making, then you'll be easily influenced. Okay. And so it really depends on how well you know the companies and how, I guess, emotionally stable about that you are.
Okay. And would you say it's a good idea to periodically evaluate the company itself and its choices it's making? Would you say it's good to get some of that information from the news? If you see your company in the news and what they're doing, would you say take that and use that information? Is it valuable? Or would you say search the company yourself on less biased, whatever sources?
So I personally look at the news a very small amount. There are a lot of good investors who check the news every single day. They're very diligent about that. But similar to, you have to find out what is signal and what is noise. And so with the news, there's a lot of noise, and a lot of times you just have to ask yourself, is this really going to matter in the long run? And there's a ton of stuff that comes up in the news that really doesn't matter in the long run. You'll probably forget about it in a couple weeks. And so a lot of times it's just noise. And so you have to, for myself, I find that it's probably not worth it to hear that much noise. So I just try to get it from the company as much as I can.
Okay. How do I know when to buy, when to sell, and when to hold on to a share?
That's a very good question. So let's start with the hold and sell. Selling shares in a company, there's only really a couple reasons you should sell a stock. And we mentioned if the valuation gets absolutely crazy, if you made a mistake, so you thought this company was great, but all of a sudden it turns out to be a really terrible company and the financials fall off a cliff and management leaves and all this stuff. So yeah, sell. Don't even worry about if you bought it at 100 and now it's at 70. If you made the wrong decision, you can't go back in the past and change that. So always look to the future and say, what is the potential of this company, because that's the value of a company, the future amount of cash that it will generate. So if the company just absolutely is really not as good as you thought it was, and the valuation gets crazy. And then another one is if you find a company that you think is a much better company than the one you currently hold. And so basically just switching horses to one that you think is a really more quality company. So I'd say those are probably the three reasons. Holding a stock is kind of a decision as well. Like every day that you don't sell a stock, it's kind of a decision to buy it, essentially. Implicitly, you're kind of buying a stock every time you're holding it. And so as long as the company is doing well, I say just hold it for as long as you can, because there's something called capital gains tax. If you own a stock for more than a year, then your tax rate is only 15%, versus if you sell it under a year, it's 30%. So there's a real incentive to be a long-term investor, especially through that capital gains tax. And then to buy a stock, like we talked about, there's kind of the quality of the business. How well do I know this business? There's so many factors that go into the buy decision that it might not be worth it to go through all of the criteria, but I have a big long checklist where I look at the management, I look at the market opportunity, how much do I think it can grow, like the valuation, how much cash do I think it's going to generate, and then based on if I want a 10% return, there's something called discounting. So let's say I think the company is going to generate $1 billion of cash over the next 10 years. I would discount all of that cash back to the present value of today based on the return I want, and you would get like a rough value of what the share price should be today. And then if the stock price is way above that, it probably is too expensive. And if it's way below that, it might be a good buy.
Okay. What's the difference between selling and trading? Is that essentially the same thing? Or is that where you switch one stock one stock for another, like you mentioned?
So when you hear people talk about stock trading, that usually implies day trading, where they're buying and selling shares in companies on a daily basis. And so in a more long-term sort of focusing on the company sense, you're probably not going to be trading all that often, maybe like a couple times per month. And yeah, essentially selling a stock could also be called trading a stock, but usually it implies the short-term nature.
Okay, got it. Are there companies that are better to hold shares in over a long period of time, while others are better for trading over short periods of time? Or is it kind of all the same?
So it really depends on your philosophy. A lot of people, so there's kind of two camps of investors. There's fundamental investors and then technical investors. Technical investors will look at charts of the stock price and see if they can find patterns. And I do not subscribe to the philosophy of technical investing, more fundamental, long-term, focusing on the business. I just find that's much more repeatable. So in that sense, yeah, if you're trying to own a business, you want to be owning it for years, ideally. And so pretty much my philosophy is trying to find the best businesses you can and then hold them for as long as you can.
Okay, so then it doesn't necessarily matter if they're rising and dropping, unless you see that the company itself has just crashed and is doing horribly. Yes!
Very good.
Thank you. Okay. Is right now, based on the current situation with Corona and everything, and just in general, are there better times in a general sense to buy stock versus other times?
Yeah, that's a really important question, because I mean, the black and white answer is yes, there are. Obviously, you want to be buying stocks at a cheaper price than a more expensive price. It's just like if you're going to a restaurant and there's a cheaper version, or if you're at a store and there's 50% off. Yes, you obviously want the better value. So all things considered equal, yes, you want the better value. But the thing is, it's very difficult to time it. So even with all of this craziness going on, the market fell like 35%, and it would have been a perfect time to, put all your money into it. But the thing is, it's already been a couple weeks and the market has rebounded pretty quickly. And so it's just very difficult to time it, because what I see happen all the time is people are saying, the market's gone up so much, I don't know, I can't buy anymore. But the thing is, they'll wait and wait and wait, and the stock market will go up 2x, and then it'll crash 20%, and they'll be like, okay, great, I'll get in. But the thing is, you're actually at a higher price than that initial point. And so a good way to kind of resolve this issue is something called dollar cost averaging. So basically, let's say you get paid $2,000 a month, and you say, okay, I add up all my expenses, this is how much money I have left over. And all you would do is just invest the money that you have left over at the end of the month into the stock market. And you just do that like clockwork every month, so that when the market dips, you're going to be investing regardless. If it goes way up, you're going to be investing regardless. You don't think about timing the market, but you just continue to stick to that plan. And there's a little saying called, it goes something like, time in the market matters way more than timing the market. So just stick to that plan, and dollar cost averaging is a great way to just not worry about the fluctuations of the market.
Okay.
Thanks so much for watching this video. If you enjoyed it, please like and subscribe to our channel, and please leave a comment below for any other questions you have. Please stick around to get all of the knowledge that you can. All right, on to the next video.